Hello Bitcoin traders, welcome back for another episode of Daily Technical Analysis with me, your host Rocky Outcrop. And in today's video, we'll be drinking this tea, looking at the sideways action that we've been in over the last day and seeing how that might shape up over the next few days and if we'll break out of that soon, which I suspect we probably will. And I just thought I would show you the wonderful, beautiful weather. We've got blue skies up above, clear blue skies, and we've got wonderful snowdrops appearing in the grass down or in the ground, and we've got plenty of buds all over the trees. But because it's such a perfect day, I thought I would point out that there's always the possibility of a false dawn. We've just come through the longest month of the year, January, in more ways than one. And that's similar to how we just went through this big 6-month downtrend there up until December from June last year. And it's always easy to start thinking ahead and get your swimming trunks out and wanting to plan trips to the beaches, but especially when you're in Scotland, you got to remember that the worst weather is sometimes actually just ahead of you. Now, is that going to happen right now? I don't think so. But isn't it a wonderful poetic time to point that out? I think so. So I just thought I'd take advantage of that today and point it out. But let's take a look at the charts and see how we bust out of this sideways action, and then for aiming for the 50% and the 618 retrace, which I think we probably are. Well, we're back in the charts. Thank you so much for joining me, and I hope that this audio here, this microphone here, makes it for a better listening experience, and the waving around of the wire doesn't make for a worse viewing experience. I don't think it could be any more distracting than my hair, really, anyway. And up behind me, you can see the 2-day chart at the moment is up. It's the Bitcoin versus US dollar 2-day Bitstamp chart, and of course this is trading view. Up at the top there, you can see the up above my head, 9,320. That's the current price at the time of recording right now, which is around about 1:30 on the 3rd of February 2020. And up here, if I've got my directions right, I don't know, it's changed the system, so I hope I've got my directions right, is 9,251 is the low and 9,615 is the high. Now that's a nearly that's a $350, $400 range there that you're looking at, which is a fairly big one, and that's quite good for trading on. And if you've been making trades here recently over the last couple of days, then well done to you for using these sorts of lines. If you indeed did use these sorts of lines in terms of where you could get out of your trades around here to take profit, or where you could get in to take to take a long, or indeed vice versa if you were shorting the tops and then you'd be exiting around here. And that's a good areas for managing your risk as well. If you're looking at that from the other way around, for instance, if you were to be shorting and the prices were going up much past here, if you shorted it here and the prices went up here, you could be managing your risk that way around, of course. Right. So since we're on the 2-day chart, I thought we could point out a couple of things just to tie in the starting part of the video. That you can see here, we've had this big downtrend over the last 6 months, and then we've come out here, and wouldn't it be lovely to just sort of, like the weather outside, to start planting all of our little plants and everything else, and to prepare for the future, and with big longs. Now, if you took those big longs down the bottom, then great. But if you're in here and you've not got a position at the moment, then it is worth bearing in mind that as we come up to this area to try around this part of resistance here, and we have potential profit taking zones up here and up here, that you could that it would be that you should be cautious. You shouldn't ever get too enthusiastic in terms of choosing where you think the price is going, because things have been so bad for so long, and now they're starting to turn around and get a bit better. You could always have a false spring, and retraces are completely natural in the market. Now, however, I don't really want to focus too much on that, because the trend is to the upside, and that is a good thing. But what we are really looking at currently is whether or not we'll be able to get out and establish ourselves above this line here, which of course, and this is represented on the weekly and on the daily as well. So you can see the weekly, you can see this line here, how we need to be up here to be making new highs. The 2-day again, want to be up here making new highs, and on the daily as well, and that's across the board on the time frames. We're going to be making new highs. The good thing is that on the monthly we have indeed actually set in a new high, so there's a point of difference there. So you could look at February as being a month where there could potentially be a pullback, or some of that frost that I was talking about, potentially, without actually really changing the macro too much. And how would that look on the weekly if that was the case? you'd be looking down here, and you could say anywhere down to here would be a higher low, which is around about that 8,700 level. There aren't any EMAs or anything in around there at the moment in terms of offering up any sort of footholds if you were looking down the way. But of course, just the sheer fact that you'd be sitting in a higher low if you were to come down would be good enough. And on the way down, of course, you've got this horizontal line here in around the 9,200s, and of course that's where we have our various different factors, as we've discussed numerous times, such as the 382 here on the Fibonacci retrace. Now that Fibonacci retrace that you can see in the background was drawn from the June highs down to the December lows at the very top of that wick, down to the wick on the head and shoulders down there. It wasn't drawn on the 2-day timeline, but I'm sure it lines up more or less. Yes, it does, lines up perfectly. So so that's what we're looking at really overall on that front. I hope I'm being fairly clear in terms of if there were to be any sort of pullback, what you'd be looking at in terms of managing your estimation of our current status within a trend. Okay, and then here back to the daily, I suppose again. Or no, I was on the 2-day. I'll stick on the 2-day for now. Sorry for being a bit scatterbrained about this. So it's just all the newness, all the different variables. Okay, so here we've got this, and this is where the high came up to on the RSI, and this is where the high came up to on the daily chart price action over here. And I have been kind of keeping an eye on this area in terms of whether or not there would be divergences. Now you can see that the RSI got up higher even than the price did here, but the price, and indeed here as well, the price action itself hasn't got any higher than this, which makes that area all the more crucial in terms of it's another factor of confluences or whatever we'll be looking at in terms of assessing our risk ever when we're holding on to positions. That of course once we establish ourselves above this area, then the fact that the RSI is higher than the RSI over here becomes a moot point, you could say, or becomes convergent. But until such times as that happens, then it's not convergent. You know, you can see that this is lower, this is lower than here in the RSI, while the price isn't actually managing to go higher. So that would be somewhat divergent, and of course that's across the board with all the different oscillators down below, including even the MACD, which is possibly just more like class B overall, but you can see the price is actually it's continued to go up under the strain of this. But of course it would do up until around this point here, where we're getting into far more significant potential areas of resistance. And in fact, I suppose since I've got the VPVR on as well, and I'm on the 2-day, I can zoom out and show you that once again we're in an area where the trading activity has been lower in this area than it has been elsewhere, and I always like to point out that puts the ball into the side, the court of the side where the trend is. So you can see the ball is in the bull's court, and that without action from the bulls, then due to the lack of trading activity, you would see that the price would just taper off. But when here we've got a lot of trading activity, relatively speaking, compared to above and below. So this is why you'd find yourself ranging in here for a little while, and that's perfectly natural, as we did here before when we came up and we ranged here before dropping down. Now that's kind of essentially, now I'm not making a fractal out of this, I'm not really saying that, but I'm saying that that this area after a rise up, and we've been caught in this area, this area overall is fairly sort of crucial for the price in terms of the overall trend. And if we can establish ourselves above here, especially on things like the 2-day and weekly, which is why I pointed them out at the start, then that's when you'll be looking for the prices to go on up, and that's great. But and of course the same points I was making before with regards to the divergences are visible on the daily. Now that's kind of a longer term view, more macro than micro, and I want to really focus in the micro, but I've just doing that macro longer term view to point out the potential for a false dawn or a false spring and what we'd be looking at. So anyway, on the daily though, just before we dive down any deeper, you can see the 10 simples coming up in here and going to be in and around our line here of where we have 9,200 or so as our sort of support currently, where we're operating in this range. And you could draw any sort of shape you want in here as we're flagging out after a move. You know, you always have, if this here constitutes a sort of flag pole and this here action constitutes a flag, it doesn't actually really matter too much what the shape of it is, if it's going up or going down or sideways or whatever. People like to draw in on things, but that's essentially focusing on one particular thing alone. If you only do pattern trading, then you're willfully ignoring other information formation, and you really need to look for confluences. So anyhow, you could say, I mean, for instance, you could say, because these tops here and the wicks down below, that you could probably zoom in a bit. Let's go to the 4 hour and say that there's some sort of triangle on the globe. It just really doesn't look like much of anything, to be honest with you. We tried saying at the weekend that there could potentially be a head and shoulders, and sure, maybe a sort of a head and shoulders here kind of played out. I would say that it sort of did, but again, it's a sort of pathetic time frame to be looking at, to be making these sorts of playing patterns off of, because just to point out, and that's the 4 hour that we were looking at before, but this is what an actual pattern looks like down below. Oh, I've messed that up. So just go back over. It's always harder on the laptop. Excuse me. So you can see here, though, that's a significant period of time. We're talking there, it's a couple of months, and you form an actual inverse head and shoulders there, and you can't see anything like that up here. This is just a smidge, a smear across the sideways action. So there wasn't worth saying too much about. You could say that there's a sort of inverse head and shoulders type formation happening on the RSI down below, and you can do pattern stuff on the oscillators, but I'm not a great fan of that either, especially since that doesn't really make any sense. The trend is to the upside, and an inverse head and shoulder would be a reversal trend on a downward trend, a reversal pattern on a downward trend. So you're not really looking for that. That's the wrong signature, as it were. So anyway, back down to the small time frames, I will try and take a look at this and then and finish up here before I talk your heads off too much. And indeed, thank you so much for tuning in to this video, and any likes and subscribes are massively appreciated. And I would just like to give a shout out, actually, in fact, to the last 2 subscribers who joined up, who I actually spoke to both of them, and one of them recommended I increase this audio quality, so that's what I'm trying to do now for that person. So thank you, Dr. J, and thank you as well to Ishn. Now remember, if you do want a shout out and you have a funny written name, tell me how to pronounce it, because otherwise I'll just make a complete hash of it like I did there now. Okay, so back onto the small time frames here, 4 hours. We're looking at this here and how the price has just come down below the 21 moving average, and that's not too big a deal, because the 21 moving average does give you false signals on the smaller time frame. So it's not like this is actually a trading move, but you could say, when we're in around the area here, that it wouldn't be out of the realms of possibility to come back down here to the 9,100s, as we have done so many times here, and then open up another opportunity for an upward trade to the top side. And I suppose if I was looking at anything just in terms of this chart alone right now, that's probably what I'd be looking at. You've got the trending downwards trend on the RSI. We've come down here, and I could expect the price to come down and actually touch off of this and get rejected on the first pass as ever, because things generally tend to do that. And indeed, it may be the only pass as well if it were to come down here and touch off of this and then, pardon me, go on up. That's one disadvantage to having a microphone next to my mouth, is that if I burp, then you hear it. Oh god, I apologize. So then, and the same sort of thing could be said for this here. There's a sort of trend down the way on the oscillators, while the price is kind of moving sideways. And well, you know, in a sense, in a sense you could say it's sort of divergent in a sense. You've got lower lows here while the price is maintaining itself, and in a sense that's kind of hidden bullish divergence. Not really, but you know, because that's not how this works. But just in terms of pointing out how this is trending down, I do like to look at this and think, well, since this is getting lower here and everything else, this could easily come down and touch off of that. And you see here the lows are actually all more or less quite similar. So more and more effort is going in to push the price down, while the price action isn't actually responding in kind, which is the sort of the paradigm behind divergence. Whether or not that actually is applicable in that scenario is another matter altogether. And then I suppose we can look down at the 1 hour time frame and see if there's anything jumping out at us. Well, look at this, the 200 and the 200 exponential, these two moving averages, the purple and the white dotted one, are also both come out towards where this area is. Now if you did have the price come down here, touch off of these things, that could be natural and almost like expected. And of course you've got the stochastics and everything coming right down to the bottom here. And is that, yeah, okay, so anyway, so you could have that coming. I was going to say something about divergences, but I'm just going to skip that. So come down here, and you could easily touch off of all of these things. You know, can you imagine here in about say something like 12 hours or a day, you could have all of this happen and then go on up afterwards, and it would have been a number of things happening at once that would provide confluence of with that. You could maybe even have this coming out of this zone here, the RSI coming out of the neutral zone, out of the bearish zone into the neutral zone, and breaking above the moving average if there were to be positivity as a rebound from that. And if these just ticked around here? I don't think they have. But you'd be seeing something similar to this here happen, where the blue goes above the purple and you start moving on the way up, and that could all happen in and around that period of time. So that's kind of what I'm looking at the minute in terms of taking advantage of this sideways action. Now I'm not going to draw a triangle or anything on there, like I said, because I don't really see that as being a particularly worthwhile exercise. Although you could say, because this here isn't quite as high as that, and because this here isn't quite as low as that, although the wick is, that we are consolidating and getting tighter and tighter. And of course, if you look down at the volume, you see that it is decreasing somewhat over the trend here, which is all totally natural in a sideways consolidation phase, and that's what you kind of expect. Now, if we had anything similar that we can draw reference to in the recent past, well, of course we have here, and we had a downward action afterwards, followed through with upward action after that, and we had sideways action here, and of course these things can drag on for a few days. So it's just a normal, typical sort of consolidation really that we're looking at the minute, and that's totally fine, especially whenever you're consolidating around about a major area of support or resistance, because that's what you kind of need to do to give the oscillators all a chance to reset, refuel your spaceships so that you can actually make it to the moon. And that all seems perfectly natural. So I'm just sort of kind of thinking, I think really overall, if you had to take a theme away from today's video, other than the one that I introduced it with, it would be just looking at the overall health of this activity here sideways, and that's actually fair enough. And you can see in the shorter term, the VPVR, this is very much the middle of the range, and the very ungreedy among us could trade even here to here, and just relax and wait and see without actually even risking anything up even higher. But there's definitely opportunity to be had across that full range there. Okay, so I think I'll just wrap this up now and leave it at that and try and publish it and see how the audio works out, and just just leave it with you. And please give me any feedback, comments, anything like that. I massively appreciate it, and I'll be with you again tomorrow. I'll see you tomorrow, guys. Thanks very much. Oh, actually, before I tune out, this is not financial advice, and I am not a financial advisor. Okay, and I'll see you tomorrow. As ever, I make these videos every day. Thanks very much for tuning in.